Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 25th of April in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, British consumer gloom deepens as the Chancellor Rachel Reeves admits the UK has no space to borrow more amid tariff uncertainty.
Bloomberg learns that China may exempt some US goods from tariffs as the tit-for-tat trade war realities begin to bite.
Plus, buying London. UK's capital gets a taste of New York's cutthroat real estate culture as Sotheby's gets aggressive on pay.
Let's start with a roundup of our top stories.
Donald Trump's tariffs, coupled with a surge in domestic bills, have dragged UK household confidence to its lowest level since Labour came to power. GfK's Consumer Confidence Index fell by 4 points to minus 23 in April, the weakest reading in nearly a year and a half, and worse than economists had expected. The prospect that global economic uncertainty could hit UK growth was reinforced by the Bank of England Governor Andrew Bailey at this week's IMF and World Bank spring meetings. Here's what he told CNBC on Thursday.
I see it when I talk to people in the UK economy a lot. They are worried about just the sheer level of uncertainty now in the world economy, the sheer level of uncertainty in policy. And we see it coming through. So we see it coming through in investment. It's quite natural for firms to postpone investment decisions. Sure. We see it also coming through with consumers. They are more uncertain.
Andrew Bailey speaking to CNBC as the Deputy BOE Governor Claire Lombardelli warned the bank must now assume a future of persistent global shocks for the world economy, requiring greater use of scenarios in rate decisions.
UK Chancellor Rachel Reeves meets with the US Treasury Secretary Scott Bessent today to discuss trade and economics. The UK wants to see the 25% US tariff on exports of cars, steel and potentially pharmaceuticals cut. The bulk of goods from the UK facing a 10% tariff into the US. Reeves told economists at the IMF that Britain's high levels of debt means that it can't spend more to drive growth.
Countries that have got the space fiscally should use it. The UK is not one of those countries. Our debt as a share of GDP is around 100%. We've got a set of fiscal rules that say that we need to balance day-to-day spending with tax receipts and bring debt as a share of the economy down. Subject to that, investing in things to grow our economies.
Rachel Reeves speaking there. She also added that the US President Donald Trump is going about fixing the global economy and global trade the wrong way. The Chancellor also pointed to Britain's relationships with the European Union and the Middle East as other priorities on top of a US trade deal.
China is considering suspending its 125% tariff on certain US imports as the economic toll of the ongoing trade war begins to bite. Sources tell us that authorities are weighing the removal of additional levies on medical equipment and some industrial chemicals. The development comes as President Trump insists his administration is in trade talks with China, despite Beijing publicly denying any active negotiations and reiterating its demand that the US revoke all unilateral tariffs. Speaking to reporters at the White House, Trump had this to say.
Well, they had a meeting this morning, so I can't tell you. It doesn't matter who they is. We may reveal it later, but they had meetings this morning, and we've been meeting with China.
That statement followed remarks from China's Commerce Ministry, which had dismissed speculation that any progress had been made in bilateral communications. Meanwhile, China's central bank announced it would boost liquidity through one of its policy tools in a bid to shield the world's second largest economy from the strain of punitive US tariffs.
US stocks and Treasuries jumped yesterday after comments by a Federal Reserve official boosted odds that the central bank will cut rates in the coming months. Speaking to Bloomberg, the Fed Governor Christopher Waller said that firms may begin laying off more US workers if aggressive tariff levels are reinstated by the Trump administration. He said that he would support rate cuts if there's a significant rise in unemployment.
See, I'm willing to look through whatever tariff price effects there are, and I've said that. So for me, then, I'm not going to overreact to any increase in inflation that I think is attributable to the tariffs. But if I see a significant drop in the labor market, then the employment side of the mandate, I think, is important, and we step in, and we would have to start. I said this last week in my speech. I would expect more rate cuts and sooner once I start seeing some serious deterioration in the labor market.
Christopher Waller speaking there. The Cleveland Fed president, Beth Hammack, was even stronger in her view. Speaking to CNBC, she said that the Fed could move in June, quote, if we have clear and convincing data by then and know which way is the right way to move at that point in time.
Google's parent company Alphabet has reported first quarter revenue and profit that exceeded analyst expectations. The numbers were buoyed by continued strength in its search advertising business. First quarter sales, excluding partner payouts, were $76.5 billion. That's more than $1 billion more than what had been expected by analysts. Mandeep Singh, global head of technology research at Bloomberg Intelligence, says new developments at the firm haven't hindered growth.
Google services revenue was a slight beat, but what was really impressive was the margin beat on the Google services. Mm-hmm. And a lot of it is because everyone thought because they're adding AI overviews, that's going to hurt the margins of search. Well, it didn't happen.
Mandeep Singh from Bloomberg Intelligence there. Alphabet's net income came in at $2.81 per share, 80 cents higher than consensus estimates.
The United States will demand that Russia accept Ukraine's right to develop its army as part of a peace agreement. Bloomberg understands that the White House will push back on the Kremlin's call for Kyiv's demilitarization as a condition for peace. Russian Foreign Minister Sergei Lavrov said that Trump had provided strong support to date.
President Trump is probably the only leader on earth who recognized the need to address the root causes of this situation. When he said that it was a huge mistake to pull Ukraine into NATO, and this was a mistake by Biden administration, and he wants to rectify this.
That was the Russian Foreign Minister Sergei Lavrov speaking exclusively to CBS's Face the Nation. Russia has continued to bomb Ukrainian cities even as talks have continued and as it has insisted that it's prepared for peace. Moscow launched the biggest airstrike of the year this week, targeting Kyiv and killing at least 12 people.
Those are your top stories on the markets. The S&P 500 on Wall Street heading for its second best week of the year after rising by 2% yesterday. We've got futures heading another 0.5% higher this morning. Some optimism in Asian equity markets too after that report that China's considering lifting some of the tariffs on US imports. The MSCI Asia Pacific Index 0.7 higher. The Hang Seng in Hong Kong's up by 1.4% as well. The dollar strengthening 0.3% amid risk on sentiment. So we're seeing the Japanese yen 0.7 weaker this morning at 143.66. European stock futures are pointing to a boost at the open today as well, up 0.5% for Euro stocks 50, and the euro is 0.4 weaker at 113.40 against the dollar.
Now, in a moment, we will bring you more on what to expect from Rachel Reeves' meeting with Scott Bessent later today, and also how bigger pay packets are apparently sparking a talent war among London's estate agents. We'll get to that in just a moment.
Before we get into the detail, though, of what the Chancellor said, I was struck by a question that she was asked during an event at the IMF spring meetings in Washington, perhaps a much trickier question than any of the economic ones. So Rachel Reeves was asked what her favourite film was and how it was emblematic of her economic policy. Take a listen to her answer.
I've got 2 young children, so I only ever really go and see children's films these days. So Paddington, Wicked, Harry Potter movies is the sort of genre that I'm not sure it's my choice, but that is what I do.
So that was the Chancellor's answer. I thought that was pretty reasonable.
Yes.
As
asking a really busy person who's got a massive job whether they've got any spare time to watch films. Thought she did quite well.
I mean, look, I hate being put in the spot like that because I feel like people judge you based on when you have to pick a superlative of what is your favourite. Although I think had Rachel Reeves thought about it, she probably wouldn't want to be drawing parallels to the likes of Wicked. You know, which does she identify with more?
Well, the Paddington thing just, of course, brings up that issue of, you know, whether she's giving the the Americans a hard stare when it comes to the...
Marmalade sandwiches for all.
Yeah, exactly.
Potentially, that was one of the parts of that discussion that stood out to us this morning. But let's get into, I suppose, the meat of what Rachel Reeves was discussing. She's meeting her American counterpart, Scott Bessent, in Washington later, hoping for progress on trade talks that might lead to a deal that could perhaps limit the impact of some of those tariffs. She's already said that Donald Trump's going about addressing trade imbalances the wrong way and warned the UK doesn't have space to borrow more. Our UK politics reporter James Wilcox is with us for more. James, Rachel Reeves has talked a lot in Washington this week about trade. Do we have a clear idea of what her position is going to be going into this meeting with Scott Bessent?
Yes, we do. And it's quite remarkable, actually, because I'm used to a sort of diet of, I couldn't possibly comment on ongoing negotiations. But her position is free trade is good. Tariffs are bad. The UK is happy to lower its tariffs on cars coming from the US, but it would like global 25% tariffs on cars and drugs removed on it in turn. It's not going to budge on food and tech safety standards, and she's not in a rush to do a deal. Now, she said that in multiple media outlets, in multiple places, and across the sort of breadth of US political sort of life. The one caveat I would add is, in the UK, polling suggests that Donald Trump is incredibly unpopular amongst Brits, and a recent poll by YouGov suggested that only 14% of Brits would react to tariffs by seeking closer trade deals to the US. So part of Rachel Reeves' job is not just to be the Chancellor who manages the finances, but also one of the second most senior politician in the Labour government. Some of this is also posturing about the UK not being seen to be sort of kowtowing to the US too, which is why this meeting with Bessent, her counterpart in the US, the Treasury is so important, because it's the first time they'll have met person to person to actually talk behind closed doors about what actually might be being compromised on.
Yes, because the other question, for the UK, the other issue for the UK is actually Rachel Reeves admitting the very difficult fiscal fiscal challenges that the UK has. She was also quite clear about that.
I mean, I was struck by your chat about films, because I think there's no magic coming down the track. There's no magic money tree, and there's no magic from Wicked either. There is a real awareness of how difficult the situation is. And the name that kept coming out of Rachel Reeves was Germany. Germany, because Germany has a debt to GDP ratio of 40% versus the UK's 100%. And that gives it far more fiscal space, and she's very aware of that. There was something new, though, in what she was saying. In her role as sort of the Iron Chancellor, it's quite rare to hear Rachel Reeves say that more spending is good. And yet, in this IMF meeting, she said that governments should be spending more. The implication being, if she had fiscal space, and she directly said this, she theoretically could be spending more. However, she sees herself as tied into the UK's very indebted situation. But I think that gives you a bit of a hint about what her actual ideology and instincts are, but also how she sees herself as tied into the UK's restraints.
OK, James Wilcox, our UK politics reporter, thank you.
Now, to the London property market and a shake-up among the city's estate agencies. Sotheby's is using new pay tactics to attract top talent from rivals. Our residential real estate reporter, Damien Shepherd, joins us now for more. Damien, good morning. What is Sotheby's doing differently to London's traditional property agents? I mean, people like NightFrank and Savills.
Yeah, one of the things that really surprised me when I started immersing myself in this world is that London's traditional property agents, when one of their sales agents works on an £80 million, £90 million deal, they don't actually give them commission on that sale. So the traditional model has been to earn a salary and a bonus at the end of the year that reflects your performance and the team's performance. So in comes Sotheby's a couple of years ago with their New York eat what you kill style brokerage model, and they are making a serious mark. They have no geographical restrictions on where their brokers can do business. So they're kind of rubbing shoulders in London's exclusive districts, almost battling against each other to try and secure these deals. And we've seen a massive amount of poaching going on. A fifth of the brokers they've employed, the 53 brokers they've employed since their inception a couple of years ago, have come from NightFrank. So we're seeing a real shift in how things are done at the top end of the London market.
How much has market conditions got to do with this, though, this poaching of talent by Sotheby's?
Oh, big time. I mean, I've come on here several times, Stephen, and spoken about how the market has been weak over the past few years. Transactions are down. There's massive discounts needed to secure deals at the top end of the market. That's all down to tax changes, interest rates being higher. And if we put ourselves in the shoes of an agent at these traditional brokers at NightFrank and Savills, who've typically relied on the overall performance of the team, at a time when transactions are down, a lot of them have been tempted to move over to Sotheby's, where they're offering the massive minimum pay guarantees of up to £1 million for their first year at the company. And it's just giving them an incentive to move across and know that, you know, if they're working to the point where they're getting a few deals, they're going to have a direct flow of commission to their bank accounts from that. So, yeah, that's why we're seeing a massive shift in how things are running.
Oof, I'm tempted to whistle at £1 million possible pay packet. Wow. In terms of the old school agents, then, what are they doing to try to protect themselves, I suppose? And what does it also mean for people who are buying and selling homes in London?
Yeah, so I mean, the newest angle in our story is that NightFrank has actually started offering the option of commission to their sales agents, and that's breaking centuries-long sort of pay methods from these traditional agents. Now, that, you know, my sources tell me that is in direct response to what Sotheby's are doing. But ultimately, these traditional brokers will just be hoping for the market to bounce back. You know, there's lots of positive talk about what Sotheby's have done, but the true test will be when these transactions start booming again, when the values start rising again, will these brokers that have made the move to Sotheby's start knocking on their old managers' doors and want to go back to these more established brokers who have a bit more of a reputation in the industry?
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.